Hello traders, welcome to our webinar today. I'm your presenter, Mario Satinodoru. I'm the Chief Analyst here in FinMarket. Please write me down in the question area if you can hear me okay, if everything sounds good to you, so we can start. Also, I will let you 5 minutes in the end, so you can obviously ask your questions to me and I will answer them for you. So if you like to write me in the chat if everything is sound good, I would much appreciate it. Thank you. We're gonna start in about a minute or so bear with me. So let's get ready for this amazing webinar. Today we're gonna study the market psychology. We're gonna try and teach you how potentially you can trade without fearing the market. Okay, before we do that though, let's go through our disclaimer. Please take a moment to just read through this, make sure that you understand what our disclaimer states, just to help you out. In essence, we are stating here that material analysis that we're going to present to you are not for trading purposes, only for education. Have in mind that any past performance is not a reliable indicator for future results. So please have in mind also that leverage in trading, it is a high risk. So have that in mind as well. Now let's go through and let's talk a little bit about me, the presenter. My name is Mario Satinodoru. I'm the Chief Analyst here in FinMarket. Basically started back in 2012 with my own trading account. I've been studying trading analysis since then. My main theme is trading psychology and technical analysis on the no indicator theme. Mainly, I like to constantly get updated with the market and have an ongoing information streaming, so I can be up to date with my fundamental and my technical analysis. I have been featured in Yahoo Finance, FX Street, Nasdaq, Empire, and so forth. And I have been working with many Wall Street traders to develop strategies and EAs that they can help people with their trading. For the past years now, I've been also teaching people how to trade and how to have an better view in the trading. And I am here in FinMarket, which they are hosting me as their chief analyst. Now, let's take a moment to see the overview of this webinar. Basically, we can say that market psychology is considered to be one of the most important aspects in trading. Okay, now someone has to be mentally prepared in order for him to be able to enter the market and has confidence and trade without fear. So the key here, the key word here is mentally prepared. Okay, so someone has to be prepared in all the aspects, including the markets, the psychology of someone. Now, a trader also needs to know how to trade based on a specific set of criteria. We're gonna learn what is this, and also he needs to learn to think in probabilities, not in possibilities. Again, we're gonna explain what that is. That will enable him or her to react in a certain situation in the market with a degree of success. Now, let's see our objectives for the day. Now, we're gonna start with the sentence of understand how most traders think and act. Really important to know how to distinguish a professional trader from a novice one. Okay, understand how the disciplined traders should think and act. Obviously, disciplined trader considered to be someone which is been most of the time successful and be on the professional side. You need to understand how to trade without fear. That is the key. Okay, I'm gonna give you some hints, may I say, some guidelines in order for you to go through that path. Okay, it depends on you if you want to embrace this this amazing information that we're going to provide to you. Okay, but take a breath, a deep breath, stay with me, and you see that everything makes sense. Nothing difficult. It's very easy for you to understand. Now, present a set of rules to define a trading plan. Obviously, I'm going to present to you some way of how you can define the trading plan, how you can basically structure a trading plan so you can follow it. Present the process of preparing yourself with when different scenarios occur. Obviously, you need to know how to react in a certain situations. Let's say the market goes against you. Okay, you need to know how to react in that situations. Okay, you need to understand why we should think in probabilities. Keyword here, probabilities. I mean, when you understand what I'm saying regarding to that, we'll get into an aha moment. Okay, understand how to prepare your day for trading. Very important. You don't go to work without having any plan of action. You don't go and open a business without a business plan. You need to be prepared for your day trading because this is an actual business. Okay, you need to understand that it's not a hobby, it's business. Now I'm going to present the mental and practical exercises, how to progress to the next level. Okay, it's a thing that will help you obviously have more control of your emotions. At least we want to try to show you that, and present the fear and the happiness zones, which again I'm gonna show it to you in a later stage. Now guys, you need to understand how most traders think and act. Okay, pay attention to this. The next two slides considered to be the meat of this presentation. Please bear with me and let's go through it. Okay, now fear. Fear, it is an immobilized action, basically. It is an immobilized feeling. Okay, when fear kicked in, one can't have an action into the market, meaning that someone might be freeze and can't take any action regarding trading. Fear will lead someone to lose control. Okay, will move someone to make reckless moves and to not be able to follow its pre-made plan and strategy that might be successful. So fear, in essence, will define someone's success, okay, or failure, even though the trading plan or the strategy that this trader uses, it is successful in essence. So we need to understand that fear needs to be obsolete. If not obsolete, because obviously we are human beings and emotions is in our core, we have to suppress some of our feelings that lead our brain in different paths rather than the one that we predefine to follow. Okay, so fear can be multiplied when someone falls into uncertainty, meaning that someone, when he is in the fear mode, diverts from his or her plan, then he's gonna think that, oh my God, what I'm gonna do now? I mean, I don't know, I don't have any plan of action because fear made me divert from my plan. So that it's an uncertainty, that it is something that will create someone to fall into traps. Okay, will create emotions that someone will not be able to control. So how we going to obsolete fear, or at least suppress? Knowing how to act, okay? Knowing how to follow certain rules. If we cannot predict the future, which we can't, if we cannot predict what the market is going to do, which again we can't, because it is a random outcome from a collective society that changes every day, because every day each trader have different feelings, different actions, different trading plans. So how you can predict market? You can't. But you can predict how you're gonna act in times of uncertainty, and you can drive the probabilities in your favor, okay? Which means that if you think in probabilities, and if you think in a set of specific trades that you're gonna take, then you might start thinking, I'm not going to fear the market, because uncertainty is not the case anymore. Let me make it that simple. Most of the traders out there think that, oh my God, I lost my trading, I lost my trade today. Okay, I mean, I lost. I'm getting into the fear mode because I lost. No, you need to have a set of trades, and you need to take all these trades into consideration before you have an outcome. Meaning, let's give an example, and this is an example, it's not for reality. Okay, so let's say that you take one trade a day. Let's say that you take 24 trades a month. Okay, how can you know which of these 24 trades are going to be successful? You don't. So you have to take all the 24 trades, okay, in order for you to have a result. So you don't need to scare anymore, because if your trading plan, let's say it's 60% success, okay, then you might think that if you follow that plan, you're gonna get 60% of success out of those completed trades. So there is no uncertainty in that. There is a predefined plan, there is a predefined management plan, and there is a predefined set of rules that you need to follow in order to have that outcome, because there is in the probability zone the 60%, because you have tested that. So the fear now is no more, in essence. Okay, then we have greed. Okay, so let's say that you start your trades, you have a trade, your trading plan says, for example, take profit, I don't know, between 50 and 80 pips, let's say. Okay, but you see numbers now, actual numbers, real money going up, and you say, okay, why should I take out my order? I should let it go. So now you're diverting from your trading plan, because maybe the barrier when you set your take profit, I mean the ceiling to take the take profit that you set, maybe it's some kind of support, the resistance level, or a Fibonacci level that is strong according to your plan. And now because of the money that you want to earn, you divert from your trading plan and you go with the greed mode, meaning that you want to take more from the market. But listen, market will give you whatever it's going to give you. You can't take more from the market if market does not allow you to get. So you need to stick with your trading plan. Okay, this is what you need to do. You need to stick with your trading plan. Don't go into greed mode like most of the traders do. Okay, stick with your trading plan. Take whatever your strategy states that you can take. All right. The third one is euphoria. Okay, it's a funny one. All right, because I have seen hundreds of traders get into euphoria zone, and it's quite funny because they think that they are the king of the world. I mean, no one can touch them. Not even the news, the actual news from the actual companies or from economies can touch them. because their trading plan is above everything. Listen, you need to know, and you need to understand that market, it's an environment that is constantly shifts, it's constantly changing cycles. It is a collective society that is completely different the next moment. And maybe you need to readjust your trading plan in some point in order for you to be updated. It's like when you have your own iPhone or your Samsung phone or whatever phone you have, and you just fall back without updating the phone. Means that in a certain time, you're gonna be obsolete. Your phone will not work with most of the applications out there because you need to update it. So your trading plan, your strategy needs to be constantly updated according to the market cycle, which is not so difficult to find out because you can basically, and it's one of the webinars that is going to follow the next days, how basically the market cycle works and how you can pretty much estimate some movement ranges. Let's say, for example, tip ranges. Okay, let's take the euro cut, for example. It's changing according to the cycle or to the market cycle, which has to do, let's say, with the supply and demand of the oil of the Canada. Okay, so there are some stuff that they are predefined, and there may be tools to help you readjust your trading plan and not get into a euphoria zone when your when your trading plan is successful. You need to stay neutral. Yes, I'm profiting, that's fine, let's go forward, because if I'm profiting with this, that means I might profit it with the next trade. Maybe yes, maybe no, but if I have some stream of failures, I need to come down, don't get into the fear zone, and come back from the euphoria zone and say, what I'm doing wrong now. I need to readjust my trading plan. Simple stuff, guys. Stuff that makes you think that is, oh my God, it's too simple. Yeah, it's too simple because our feelings is not that complicated. Are simple stuff. We use them every day in our everyday life. So you can use these feelings to act with logic. Okay, basically what I'm trying to say is, don't let explosive feelings to overcome your thought process and your logic, because most of the time your brain will lead you to the path of the least resistance, meaning that your brain most of the time will try and solve problems in order for the brain to be successful. So you have to start trusting yourself in certain areas. How to do that is to learn more about you. I'm gonna talk about that. Now, the next one, the fourth one, is the self-fulfilling task. Okay, I mean, we all want Porsche, we all want some huge houses, airplanes, yachts, and stuff. Well, we all want to be successful, but the market doesn't care if you want that. The market doesn't care if you want at the end of the month to have a certain amount of money to pay your mortgage, for example. The market doesn't care if you want to have the same car that your neighbor has. That's a self-fulfilling task. That is for you to have. That is good to have goals, but if it's not interfere with your mindset and your logic and your trading plan. All right, you need to have your goals, write them down and leave them aside, but don't pursue success driven by some things that you want. You remember, you need to have the money and the things that you want to acquire as the result of your success. Okay, is the end result of your success. You need to focus on the process before you reach your success. Okay, so focus on the process, and you're gonna see that the process, if it's correct, is gonna drive you towards your tasks, but write them down, put them aside, have in the back of your mind that you want to reach those tasks, but don't let those tasks to be interfering with your thought process and divert you from your plan. Okay. The fifth one, which is again one of the most important, is try to predict. Most of the traders try to predict. Come on, guys, you're all clever people. I mean, if you find out what trading is, and if you are here and listen to an analyst, it means that your average IQ is probably is above the normal. Okay, so you know that you cannot predict anything, isn't it? I mean, you know that you cannot predict pretty much anything. You're trying to put the probabilities in your favor. You don't have a crystal ball and you know where the market's gonna go exactly and when it's gonna go. You don't know where exactly a hurricane will strike. You don't know how you're gonna get to your work every day. You know that you're gonna go probably because the probabilities are in your favor, because you get in the car in a specific time and you have a specific time to reach your goal, to your work, meaning that your probability is in your favor, but you don't know how you're gonna go. You don't know if you're gonna stuck in traffic for too long, or maybe the traffic is not there anymore. Maybe you're gonna find obstacles in your road. You don't know that. That means you can't predict. Okay, you have probabilities in your favor. The same thing with trade. You may have probabilities that, let's say, for example, a future is gonna go up. You know, in your gut, in your trading plan, in your strategy, that every calculation you did is correct according to you, and that future will go up. All right, let's take that. But you don't know how it's gonna go, how many fluctuations it's gonna have, where exactly it's gonna go, and when exactly it's gonna go. So you don't predict, you build probabilities in your favor. Market considered to be chaos according to Bill Williams, but the chaos always has a structure, and someone can have an order in chaos. This is according to Bill Williams. Okay, so that is something that may drive you towards to a more understandable environment. Something else, market, guys, is not something that is coming to you. It's not something that is coming to you and eat you alive. Market informations are out there so you can absorb them and take them, internalize them, and have an outcome. So you don't live and die when you win or lose in the market, because market doesn't have anything against you. It's just that. So you don't need to stress if you lost or if you profited. I mean, if you profited, you get excited. If you lost, you think you're gonna die. Everything is against you. No, it's just numbers. It's just is the information that you receive from the market. The way that you receive the information from the market has to be neutral. They don't have to have any attached feelings on those information. That's why I'm telling you to open your brain and have the information come into your brain without any bias. This is how you're gonna actually have basically a correct equation for your analysis. I mean, let me give you an example. When you see a number, and that number is your salary, obviously it's have a positive attitude attached to it. Obviously, when you have a number in your mortgage, have obviously negative feeling attached to it, isn't it? This is exactly what I want you to avoid. Take that example and do exactly the opposite. Don't have a bias in the information you get from the market. Be neutral. This is how you're gonna be able potentially to have a correct point of view. Okay, market is not coming to you. to eat you alive. This is what I was used to think when I first started. Okay, but no, it's not that the case. Okay, trust me on that. Now we talk about how the most traders think, but let's see how a disciplined trader think and act. Okay, that's gonna be the good one. Okay, it's gonna be the more exciting part, because now you actually gonna see how probably most of the traders think and act. Okay, regarding to the professional, to our professional, I mean they are professional. Now define your act and act. Okay, act is a key word. Basically, most of the professional traders out there, probably they just act because the trading plan and the strategy is already internalized into the system, and now it's self-evident that they need to act and stop thinking. Obviously, you have everything in place, you did the calculation, you did everything correctly according to your plan, you just need to act because there is no emotion attached to it, no fear, they are just neutral. My trading plan says that I should enter in this area, I enter in this area. This is how a disciplined trader acts, like a robot. Okay, this is the optimal way of thinking. Obviously, to reach this level, you need to practice, and you need to practice. That's why we first defined our edge. So our edge, it is the one that is going to distinguish one from the crowd. And the edge that is going to define you, okay, it is something you have to build. And I'm going to explain to you with the next one. Have a trading plan. That's the one that you need to do. You need to have a trading plan. And listen, the trading plan that you need to have and your discipline rules on the third section are the ones that has to be predefined from you to you, not from someone else to you, because every single trader is completely different. Even though the people are presenting this presentation are learning the same information, different trades will occur if I put you together on the same asset, with the same trading account, with the same strategy, believe me, because it's been tested by many institutions out there. And we know that every trade is different. So you need to have your own discipline rules and your own trading plan. Let me explain to you why. When you go to your closet and you put, I don't know, your trousers or your t-shirt, it's your clothes, obviously, it's not someone else's clothes. Even though if someone else is the same body structure like you and take his clothes and put it on you, you're gonna feel strange. You're not going to feel, you know, like it's your clothes. It's gonna feel strange, alien for you. That is exactly if someone comes to you and give you a trading plan. It's not suited for you. It's suited for someone else, someone with different mindset, someone with different thought process, with different experiences in life. Okay, so why taking someone else's trading plan, someone else's discipline rules, and apply to you? You can have some samples of trading plan and discipline rules and strategies, and you can adjust them on your preferences. For example, if you are a conservative trader, you need to understand that you are completely different with someone that is more aggressive. Someone which is jump the gun is gonna need different trading plan and different rules from someone that is patient and wait for the market to unfold. Okay, to do that though, you go to the fourth one. This is how the most of the professional traders think, is to learn about themselves. So learn about yourself, learn how you act in times of uncertainty, in time of crisis, learn how you act in times that everything goes well. You need to know yourself. You need to understand how your thought process it is progress. in your mind. You need to know which of your feelings are basically there to cut you off or to help you. And you need to know those things. Okay? So guys, please have in mind that everything that has to do with your feelings need to be controlled. They don't predict, these guys. The professional ones never try to predict. They just make estimations. They don't know what's going to happen. No one knows, guys, what's going to happen. This is completely random. You need to understand that. But with correct education, correct trading plan, and discipline rules, you may not going to be 100% success with your trading plan, but at least you might have an edge against someone that doesn't have this information. So try to not to predict, and you're gonna see that probably the fear is gonna go away because the market's gonna do whatever it needs to do. You're gonna just have a neutral receiving attitude, and that's that. You have your rules out there. You have your set of trades that you're gonna take. Let's see if those set of trades do not unfold with a profit. You move to a next strategy. That is how most of the traders out there think and act. We're talking about, again, the professionals. Now, the sixth one is something that you might see as an obvious. Define your risk. Yeah, I know. I mean, most of you are gonna think, okay, I'm gonna put my stop loss in this certain level, and I know that I'm gonna lose $100 in this level, so I'm cool with that. No. What I want you to do basically is to embrace the risk, because most of the traders out there, the unprofessional ones, they actually define their risk, but they do not embrace the actual risk. They do not come and say, I'm ready to take 100, 200, 1000 stop loss. You need to internalize the fact that you actually, if the market goes against you and hit your stop loss, you're gonna lose those money. You need to understand that and move forward. Because if you cannot define your risk and internalize the fact that you're gonna lose this money, the same goes to the opposite. You cannot define your profit, and you're never going to be enough, and you're going to get into the greed mode and try to get more. That's why you need to define your risk as you need to define your reward. Okay, guys, so that's the 6 rules of a disciplined trader according to my experience. And everything you hear in this webinar, most of them, except the fact that are distilled knowledge from many years of reading and learning, but also are based on personal experiences. Okay, and this is very powerful. Let's go next. So let me see. Yeah, the next one is that. Understand how to trade without fear. Need to understand now. Let's get into a little bit more on the more general sense of things. Have no expectation of the market. That's the one that we said that before. Need to have no expectation for market. Leave the market alone. Leave the market to give you the information that you need. Learn to trade objectively with no external factors interfering with your plan. You know, there is a funny story that I heard from a Wall Street trader that for many years ago. This guy said, you know, I used to have a friend that he was such an amazing guy and such an amazing trader in the pit. He used to come and just take the money and go. The guy was brilliant. But one day he lost everything. And why is that? because before coming to the pit and try to trade with the other traders in Wall Street, basically this guy had a fight with his wife, very, very serious fight with his wife. On his way out, he kicked the dog. This is something that is stuck into my mind. I mean, the poor dog has nothing to do with that. And then this guy went into the pit and tried to trade, and he lost that day most of his portfolio. Why? Because there was emotions that were interfering with his mindset, which those emotions were never meant to be there, because their trading plan, trading rules were pretty much adjusted to a neutral mindset and not an aggressive one. So when these fears kicked in and feelings kicked in, his brain said, oh my God, I don't know what to do now, because I never was intended to feel like that while I'm trading. So what I'm doing now, I mean, let's try that and let's try that. And he tried different things that wasn't in the trading plan, led to uncertainty. The fear factor kicked in because now we are in uncharted territory. We don't know what to do, and escalated the fact that he didn't know what to do, and basically pretty much closed everything and just went back home and never came back. That's a sad story from a successful man. The funny thing is that he actually stayed with his wife, and he never divorced his wife. He was okay after that. I mean, try to don't have any external factors interfering with your trading plan. Okay, please. That's gonna be a shame. You do not eliminate your emotions, just learn to control them. There are many exercises out there. You can breathe in, breathe out, and stuff like that. Some music that can relax you. Exercises before you start trading. Some protocols that you can start implementing regarding yourself. I mean, regarding how you act. Okay, so try to do something to control your emotions. Okay, learn how to trade in a set of trades and then calculate your results. I mean, let's say that you have 2 trades. Okay, both of them lost, or one, whatever, and then you pretty much calculate the whole month. I lost, so everything's gonna be losing now. Or yes, I won, and now everything's gonna be fine. No, do your trades equally every day. Try to do that, and in the end, calculate your results. In the end, that's the key word here. Okay, not in the middle. In the end. Then we have the obvious one: test your system, guys. Test them. Okay, just test your system. Don't go out there and just blow everything up. Test it. Do not see the market information as threat. This will help you, again, trade objectively. Okay, nothing comes at you. No one is against you. Those are the markets, and the markets are neutral. Learn to embrace the formation with neutrality. No more biases on the information you get from the market. Key points: try to learn more about you. Come on, try to learn more about you, guys. It's easy stuff. Learn more about you, your feelings. It's you, it's yourself. Sit down and learn more about you. Do not try to find the holy grail. That is not such thing. There is no gold indicator that will make you rich. Try to set up a strategy around an indicator which is successful, so you can get the outcome you want eventually, hopefully. Okay, do not blame yourself in case for following your own plan and lose. I mean, maybe tomorrow you could start implementing those informations, and you come up with an idea, you come up with a plan, let's follow the plan, blah, blah, blah. Then in the end, you're not profitable. It's not you, it's not me that I gave you the information, it's not the market's fault, it's just matter of adjustment of your trading plan. Okay, it's not your fault if something is not profitable, because you don't know. You need to test it. So test it first. Okay, and if it's failing, okay, that's that. Let's adjust it. Let's create another strategy. It's easy stuff. I mean, there are thousands of strategies out there that can be adjusted to you. So what's the point of disappointing or blaming yourself that you never won or profitable, maybe profitable in a set of trades? So what? All right, okay. I mean, for those guys out there that going to fish, for fishing every day, I don't know, every weekend, they don't stop going fishing because they didn't get any fish. They go there, they readjust the things, there are tools to try and catch a fish. That's the same thing. Okay. Probably we are trading the expectations of other traders. Obviously, we are trading expectations of other people's mindset. Okay. Basically, someone is believing that the market is going to go up, so he's bullish on that. He go long. So his expectations should be that the market will go up. So and you saw a trend, because many people expect, for example, gold to go up, let's say. Okay, for example. So what you are doing, pretty much you estimating and you pre-calculating others people expectations. So what is the market in essence? The market is others people expectations. Pretty much they are trying to achieve something, and you are trying to achieve something. And if you are in line with the global, the collective, mindset out there, collective society, then you might be able to have a degree of success. So it's a game of the mind. Okay, it's a game of the mind. Let's see some rules that will help you to define a trading plan. Okay, take notes, guys, because this is basically the practical use of the information I gave you. All right, let's go through it. First, study a strategy thoroughly. You built a strategy, you took a strategy and you're trying to adjust it, learn it. Don't leave any gaps that can lead you to distraction. Learn everything that has to do with the strategy, everything that has to do with the tools that you use in that strategy. You need to know everything. So learn everything, right? Obviously, you need to do some paper trades to refine your entries. Obviously, I mean, you do adjustments on your car so you can go and work better when you're driving, and so do the same thing with your strategy. Okay, so do a paper trade so you can refine your entries. You need to do some demo trades also to be a little bit more self-confidence before you enter the market. Okay, so that is going to give you a sense of confidence, not only on your strategy but also on how to use the platform. Because if you internalize all the information that has to do with the functionality of the platform, at least you're eliminating the unknown factor for the platform. So you left only with the strategy feelings, let's say feelings that you need to comprehend. Okay, so try to eliminate everything that is in the uncertainty area. Okay, do a set of trades. Obviously, like we said, let's take an example. It's not a rule, it's an example of 24 trades, meaning approximately one trade a day. Take those trades, okay, and then have an outcome, a result, and then see if your strategy it doesn't work. Don't go up to the 6 and then say, okay, this is profitable or this is not profitable, and just be done with it. Have a set of trades, because you never know which trade is going to be the next winning one or the next failure one. Okay. Now, the reason basically to do that is not to see if the system works in essence, but to see if the system works for you, because you might have the best system in the world, but it's not for you. Okay, so you need also to take all the potential signals out there that they're produced by your system to have an objective result and be done with it. That's it, guys. They're not complicated stuff. Let's take an example of a scenario that someone could react. For example, I'm start to lose. That's fine. Relax, go to the next trade. Consistent losing. Need to evaluate your mental abilities to work with the system, because might be something wrong with the personal life. Okay. Check your system as well though. Okay. So your mentality and your system needs to be in check all the time, especially when you start consistent losing. Leaving money on the table, meaning get out really fast from the trade. I don't let the trade to unfold and give me and hit my target. Okay, evaluate your mentality and lower the lot size. Maybe the lot size is too much for you because you cannot embrace the fact that you're gonna lose, let's say, $1,000 when the market hit your stop loss. Lower your lot size up to the point that it is comfortable for you. Okay, and here we have again an example of 24 consistent wins. That again, evaluate your mental health to see if you didn't get into the euphoria zone. Then go to the next set. Reset. We're done with the 24 trades, for example. Start again. 1. Go. All right. Understand why we should think in probabilities. If you think in a probability manner, that means you are trying to eliminate the possibility to fear the market because you had make a bad prediction. Okay, that is pretty much self-explanatory. But let me try and enhance this thing. If you think that the market is gonna go up and then drops, you're gonna say, "Oh my God, I don't know what I'm doing. Oh my God, all the information that I have is wrong." No, it's not. Just didn't work out. Now, you don't know the next one who is gonna be. So you don't have any expectations from the market. You just be neutral. So you don't afraid, because you're gonna get only the signals that are objectively generated from your system, and go through with that. You need to understand that in the market, you need weaker emotions and more probabilities. Okay, that's that. No need to explain. And a potential trade is a set of probabilities. Again, think a potential trade as a set of probabilities. Break down that potential trade and see if that trade, a probable trade, meets the set of probabilities that you're trying to have. That is powerful. And I believe that you are very, very, very not lucky. You are in a very high position right now to embrace these informations and get this information from me, because these informations are gold, guys. Okay, you have now officially an edge if you embrace most of the information that we give you. Okay, edge on what? On the fact that now you can start preparing yourself to be less thoughtful when you try to find potential trades and eliminate probably some of the feelings that they might divert you from your plan. All right, let's go to prepare your day for trading. That's at least I used to do. And let me give you that so you can start with this and you can adjust it the way you think it's suitable for you. Okay. All right. First, you need to create a list of a mental check and print it so you can check yourself. For example, how am I feeling today? I mean, it sounds a little bit stupid, but do that and it's gonna, I believe it's gonna make a difference. Okay, let's create a mental check. Let's say how I feel today. Good, check. Did I eat my food? Check. Did I'm feeling completely confident? Check. Did I have any doubts about myself? Check. Right? Then we are trying to motivate ourselves before entering the charts. You know what I used to do? I used to go to YouTube channels, put some motivational music, motivational speeches from great people, just to give me that extra boost, extra confidence with my coffee 5 minutes before the market open. Do that, get some boost of confidence, and then go to check the major news. Right, open the news, see what's going on with the world, see if some major events are coming out now. Open your charts, obviously check the technical analysis of the news that comes out. Obviously check your system as well if it's working okay. Have a list ready with your set of system criteria. I mean, you need it, and even though you know your system, you need to have a checklist. Did price did that? Did my indicator did that? Did it break that level? Checks. Okay. Then you keep track of your mental progress. Again, evaluating while you're trading, evaluating. Write notes in the beginning, how you feel in a certain in the specific events, and always try to keep a record of your trade so you go back and see, in that trade I was feeling like that and that and that, and in that trade my indicator had this drawdown, and my trade, sorry, had this drawdown, and my support didn't work. So you understand what I'm saying? You need to have a record. Okay. Well, that's was the last slide, guys. I think we covered a lot of things, and I'm feeling confident that you receive informations that are making sense. You have approximately 5 minutes, guys, to give me any questions that basically are in your mind. Please, if you're gonna do it now, because we're gonna close up in 5 minutes. So now it's 11:53. About 12 o'clock, we're gonna finish the webinar. Please take your time to write me any question you have. Also have in mind that here in FinMarket, we like to educate our clients. We care about our clients. We need you to be completely aware of what's going on with the markets. We keep you updated. We send you reports and stuff. Please read them fully. Have in mind that our people here try to have the best possible service for you guys. The markets are continuously moving, shifting, changing. We try to keep you updated, and have on the back of your mind that if you try to pretty much get through this information and have it internalized, I personally believe that you might have a sense and a degree of success. So please try to get and internalize all the information that we give you. So yeah. So for now, we expect to see any questions. Let's see. Yes. Okay. All right, guys. It seems that we don't have any questions for now. Anyhow, Thank you very much for your attention. We're gonna close and wrap up now the whole webinar. Please have in mind that more webinars are going to follow. We're gonna let you know with the links of the next ones. Have safe trading and be well. And we're gonna talk again. Thank you very much for your attention. Bye-bye.